Hi, everyone. A massive warm welcome to today's Friday Roundup, where we recap the biggest news items that happened this week. And we had a mammoth event happen, which was the British pound essentially imploding against the wrecking ball of the US dollar. Why this is important for crypto? Well, it signals that financial markets are incredibly unstable right now. And it's the top line news item, which I'm going to get to right now because it was a headline item across the world. And it caused the Bank of England to intervene in their own markets to rescue their bond markets. Now, I won't go into the weeds too much here, but essentially what's filtered out after the fact was that their bond market was in such a terrible state that if the English central bank had not stepped in, multiple major pension funds in England would have gone under. So that would have been like a 2008 style Lehman Brothers moment and likely would have spread a contagion around the world. So the Bank of England has intervened. What they're doing is buying most of the bonds that they need to get those incredible yields down. But what that does is it devalues the British pound. And that's what we saw in markets with the pound going down. Now, why I'm talking about this in terms of crypto, not only does it affect crypto markets just from it by extension, because when markets are unstable, it's going to affect risk markets, but in a positive sense, for the longer term, broader macro vision of where this market is heading, why, let's say, a lot of people own Bitcoin is insurance on the current financial system eventually breaking apart. And that means fiat currencies getting printed and inflated into non-existence. So this is a unbelievable signpost pointing to a G7 nation who's actually been forced, only moving just recently into raising interest rates and starting tightening. So they've been trying to sell bonds back onto the market. They've had to immediately stop that. They're still looking to raise interest rates, which is amusing when they're trying to print money at the same time. But that's where they're going. And it's just showing that there is such a low tolerance for raising interest rates and tightening for any extended period of time. There's just too much debt out there in these markets. And again, one of the largest economies in the world, a G7 nation, Great Britain, almost started a 2008 style crash, which may have made 2008 look a little bit small by comparison. So that is major. That's what hit markets this week. And we have to be across it because this still likely snowballs worse as the Fed continues their tightening, as the dollar goes higher. So we'll see how that plays out. All right, now for a bit of a good news story in terms of Bitcoin adoption, and you can throw crypto adoption in there as well. So Ghana set to catch up to Nigeria and Kenya in terms of crypto adoption by Chainalysis. So they are one of the best analysis firms for data analysis in the crypto sphere. They look at predominantly, Bitcoin. Think of them like a glass node where you can look at metrics on chain and on the different metrics showing you growth and whatnot. So I just want to scroll down here. So as emerging markets take the lead in crypto adoption, Ghana, a country located in West Africa, may soon catch up to other African countries regarding cryptocurrency use. In a report released by Chainalysis, researchers found that Ghana has the potential to achieve crypto adoption levels similar to Kenya, which are quite large, and Nigeria, countries that ranked 11 and 19th in the analytics firm Global Crypto Adoption Index. Now, why this is really important as well is because that region of the world suffers from incredibly high inflation. And it's also interesting because in the center of Africa, you've got Central African Republic, who recently made Bitcoin legal tender. So we're seeing it really expand out as that adoption grows. Its potential to become a leader. So I think it's Nigeria and Ghana are actually showing some of the highest peer-to-peer Bitcoin transactions in the world in terms of volume. So that is really, really important. In fact, it's right here. I'll just read it for you. So they said the trading volume from Ghana in their peer-to-peer exchange has grown by 400% in the last 2 years. That is incredible growth. The executive also believes that many Nigerians consider Ghana as their home during summer and educating Ghanaians on Bitcoin and crypto. So again, spreading out from the central part of Africa as well, but it's also gaining roots in these different areas across Africa. And I guess there's a new path forward, a new future that everyone can see there in these parts of the world when you've got something like the French franc or the colonial currencies that have been around for a very long time. And they have really no say in how that goes. And if they pivot away from that currency to their own currency, there's a lot of manipulation and greed involved in those areas, and they can never really get in front of this. So this is really important. It's one of the better news stories for crypto and Bitcoin. All right, let's pivot over to what's happening on Ethereum post-merge, because I just want to highlight a little bit of a dangerous narrative that I just saw pop up. So post-merge ETH has become obsolete. So staked ETH has more capital efficient and is profitable than regular Ethereum, and platforms offered liquid staking derivatives are bolstering its popularity. Now, I have a problem with selling that narrative because if you're staking your Ethereum on a platform, whether it be centralized, decentralized, worse if it's decentralized, but you are taking a massive risk. And when you do that, when you stake the Ethereum onto that platform, you're given a token that's liquid in return, which you can then move and trade and do other things. But you are taking an enormous risk with another party. If you still have control of your keys, yes, it's better. But you're also taking a bit of a liquidity risk there as well. What if suddenly you need to sell your Ethereum in a pinch? Let's say the price scoots up and whatnot. You might have a lockup period in some of these platforms where you have to get that Ethereum out, but they won't let you. So it's just adding to the risk of the overall space. And after Celsius and Voyager and a couple of others that went down recently, I really want to be careful with these narratives that are just spruiking. Look, just stake it here and you gain an instant yield. It's something you really have to be careful of. You wouldn't want your entire portfolio in it, but I think you just have to be mindful of it. And it's saying here that proof of stake. This is why you want to own the proof of stake token over the proof of work. I'm not sure that should be the narrative either. You probably want to own Ethereum proof of stake for potentially the scalability and what it offers down the road as an investment. But proof of work, we'll see where that coin goes. We actually brought it up in our mastermind bi-weekly, and we were asked what's the future of the proof of work token, so the secondary token that spun off that still has miners and whatnot. And we see a troubled future for it for a few reasons. It's not saying you can't make money. I'm not saying it can't do quite well. It's just when most of the developers and all the attention and whatnot has been moved now to proof of stake, it's going to be very, very hard for the miners that are remaining with proof of work that may now not be profitable at all either to really make a go of it. Are they going to be able to attract developers and tokens and protocols there to continue on that network? Is it going to be even viable for these miners? Is it better for them just to pack up, instead of being unprofitable and just grinding away year after year, maybe not making money? Where they're going to go. And also a big risk with the proof of work token now is security. If you don't have a large distributed network anymore, when you have just maybe a few miners versus a gargantuan amount, which would have been before it forked to proof of stake, it doesn't take much for a 51% attack of the network. So these are things you need to keep in mind. At any point, someone could maybe seize 51% of the network and do what they want with it if they have enough money and determination. That is possible now. So all those things just went to mind. But I just wanted to just show you this because you can see the entities as well. It is a little bit more centralized than maybe what you would like in terms of some of these big. This is where people are staking their Ethereum. If you didn't know, so Lido, Coinbase, all that, they're just keeping their Ethereum in these places. So they will have an outsized vote, a lot of these platforms, in what happens on Ethereum. That's a little bit of a critique of Ethereum and proof of stake. We'll see how that works out. It may not be a thing. It may the fairness may begin to distribute out, but so far it's a little bit centralized on how all the tokens are left. If you don't care about that, that's absolutely fine as well. If you're just investing in Ethereum for potential gains as well, that's totally fine. But it's something we wanted to bring up because just we want to be careful with sort of saying that what you won't want to own just Ethereum normally. You want to own the staked token or the derivative token. I think that is a bit of a risky narrative, so I wanted to bring that up. Okay, if we got on to this tweet here by Dylan Leclerc, it was an excellent Glassnode chart. So monthly net flows of Bitcoin on exchanges is back positive. 78K Bitcoin have flowed onto exchanges over the last 30 days. So this is really important to know. In this moment of market turmoil, you can look at on-chain data and see what's going on, what's moving maybe the price of the downside to the upside. Sometimes you can get some good insights, sometimes it can be a bit more obscure and it might be more long-term focused, so that's important to know. But this was really telling data that over this little period here where the price has been really trying to bottom or find that floor around 20,000, 19,000, 18,000, we've seen a tremendous amount of Bitcoin roll back onto exchanges to be sold. Bitcoin rarely goes to exchanges unless it is to be sold, or it's going to be used in derivatives or something like that, so futures markets. Just keep that in mind. In periods where the market's going through a large supply shock, where we could expect a larger run-up in price, you want to see large exchange outflows. So we're just constantly seeing more and more Bitcoin moving off exchanges, creating that supply shock. So eventually the buyer and seller imbalance will occur, and then price should shoot up. Okay, this one was really interesting because this is Stanley Druckenmiller. He's one of the best investors in the world. He's legendary, in fact. He's really never had a down year in his portfolio, and I think this year was his first. So can't get it right every time. But he says, and it was quite a bleak speech. He's been a massive Bitcoiner for a while, and he owns a lot of his portfolio in Bitcoin, which is interesting, and it drives the traditional financial establishment absolutely mad. But he considers it insurance on the current financial system, and you need to have some of it. But he says here, crypto could enjoy a renaissance as trust in banks fades dramatically. So if you read our newsletter, which we released yesterday, it's all about this. It's all about how institutional trust is lost and how Federal Reserves and the central banks and the media have really been helping perpetrate a bit of a lie or be misleading everyone. And eventually get to the point where it becomes what media is currently in a more general sense, which is you hear the terms fake news, and a lot of misleading titles, a lot more clickbait. It's not very helpful information, and often it's not correct. So he thinks because everyone, especially let's say in Great Britain, you suddenly see what's going on with their pound, they're bailing it out, devaluing it, suddenly your purchasing power is worth even less. It's not too long before if you own pound, you start to look, okay, well, I need US dollars here because it's the better fiat currency. And, once the US dollars pull back, what are you looking for then? Or just in general, you're looking at the fiat currency system sort of breaking apart. You're going to look somewhere else, maybe for a parallel system that might offer more purchasing power over time. So this is really important. I think it's really interesting that he keeps coming out and saying this. Now, just finally, I will finish on this because we released our monthly report yesterday. I think it's our best one yet, honestly. We cover, again, the legacy lies, and we go through. I love what the marketing team has done. It looks fantastic. We go through in these sections and look at all the quotes and comments that major central banks, especially in Australia, the RBA, have done recently. We go through what's happening in Europe as well, where we think inflation's going. We check on what sentiment's doing and what we want to see. We also check on the top 3 pivot points that we want to see for crypto to reverse from here. So super useful. We also have the buy and sell guide as well, which gives you our top 10 portfolio risk profile breakdowns. So it's worth its weight in gold. It's $50 a month, and the information here is absolutely outstanding. So get on that if you haven't. Also check your Substacks if you are a subscriber and go from there. If not, click on the Linktree link below and you can join us as a subscriber today. All right, guys, hope you've enjoyed this Friday roundup. Have a great weekend. Let's hope legacy markets stand up a little bit here and rebound. If not, could be a little bit of a dicey weekend. But apart from that, have a wonderful one, guys. Bye.